I've been doing macro analysis for 35 years. I've worked at Goldman Sachs. I've run hedge funds. I've seen every market manipulation, every short squeeze, every policy intervention you can imagine. And I have never seen a government do what Vice President JD Vance just announced. 5 words that could permanently change. The silver market, we will establish price floors. Not considering, not might, will. The Vice President of the United States stood in front of representatives from 55 countries at the State Department and told the world that the government intends to guarantee a minimum price for critical minerals, and as of November 2025, silver is officially on that list. Let me be very clear about what this means. For your silver, for the short sellers, and for the entire precious metals market. Before we dive in, subscribe and hit the notification bell. What I'm about to show you is a fundamental shift in how governments interact with commodity markets. This is the kind of policy change that creates generational wealth transfers. The mainstream financial media hasn't fully grasped the implications yet. Drop a comment, do. You own physical silver? Paper silver? Neither. I want to see where everyone stands. What Vance actually said, let me read you the exact quote because the precise words matter. We will establish reference prices for critical minerals at each stage of production. For members of the preferential zone, these reference prices will operate as a floor maintained through adjustable tariffs to uphold pricing integrity, he continued. We want to eliminate that problem of people flooding into our markets with cheap, critical minerals to undercut our domestic manufacturers. Read that again. The Vice President just described a mechanism where the government uses tariffs as a weapon to prevent anyone from selling critical minerals below a certain price. That is a price floor. And he announced it on camera, in front of 55 nations, at the State Department. This is not a press release from a junior staffer. This is not a leaked memo. This is the number 2 official in the United States government telling the world that America is building an economic alliance specifically to control the price of the metals that run the modern economy, and silver is one of them. Why this changes everything now? Let me explain why this is such a massive shift using the framework I've developed over 3 decades of macro analysis. In the Everything Code, I talk about how liquidity is the master variable. Liquidity drives everything, but there's a second variable that most people ignore: policy. When government policy aligns with market fundamentals, you get explosive moves. When policy fights fundamentals, you get volatility and chaos. What Vance just announced is policy aligning with fundamentals in a way I've never seen before for silver. Let me show you why. Silver has been in a supply deficit for 5 consecutive years. According to the Silver Institute, the cumulative shortage is approximately 820 million ounces. That's the equivalent of 10 months of global mine production that was consumed and never replaced. And here's the critical point: 71% of all silver is mined. As a byproduct of copper and zinc operations, higher silver prices don't automatically produce more silver. There's no emergency supply button. The government just looked at this data and said, we need to guarantee a minimum price for this metal. They're not fighting the fundamentals, they're reinforcing them. This is the most bullish policy setup for silver I've seen in my entire career. The short squeeze setup now. Let me explain what this does to the short sellers, because this is where it gets really interesting. The silver futures market functions because both sides believe they can win. The longs believe price is going up. The shorts believe they can drive it down, or at minimum, roll their positions and avoid delivery. That balance is what keeps the paper market alive. But what happens to that balance when the United States government announces it will not allow the price to fall below a certain level? Think about it. If you're short silver, your entire thesis is that price will drop. That's how you make money. You sell high, buy back low. But if the government has just told you it will use tariffs to prevent price from falling below a floor, your downside as a short is now capped not by the market, but by the United States government. Your maximum gain is the distance between current price and the floor. Your maximum loss? Still unlimited, because price can still go up as far as supply and demand will take it. That's a terrible risk-reward ratio, and the people running the concentrated short positions at the major banks know it. There are currently massive short positions in silver on the COMEX, positions that have been there for years, positions that have historically been used to manage and suppress price every time it gets uncomfortable. Those positions just became dramatically more dangerous to hold, because the shorts are now fighting the United States government. And I've been in this business for 35 years. That is not a trade you want to be on the wrong side of. The paper to physical ratio. Let me show you the number that should terrify the short sellers: 356 to 1. That is the current ratio of paper silver claims to physical silver backing them. You've heard about this ratio before, but I don't think people fully understand what a price floor does to it. If shorts start covering, if they start buying silver to close their positions, the 356 to 1 ratio doesn't unwind slowly, it snaps. And there is not enough physical silver in the vaults to absorb it. COMEX registered inventories are down 70% since 2020. The LBMA has lost roughly 40%. Shanghai is at its lowest levels since 2015. The silver is not there. It has been consumed, destroyed, used up in solar panels, AI servers, electric vehicles, missile guidance systems, and it's never coming back. That's the real story behind the ratio. Not just that it's broken, but that the government just made it impossible to keep it together. The China factor, and then China made it worse, much worse. On January 1st of this year, China implemented new restrictions on silver exports. Only 44 companies in the entire country now qualify for export licenses. Hundreds of smaller refiners that had been supplying the global market for decades are now blocked. China controls 60–70% of the world's refined silver supply. And they just choked it. Their state media described this policy as upgrading silver from a common commodity to a strategic resource. That's the exact same language China used before it restricted rare earth exports. Same playbook, different metal. So what did the United States do in response? They announced a 30-country trading bloc with price floors. Think about where silver comes from. Mexico is the world's largest silver mining nation. Peru is second. Chile, Australia, Poland, United States round out the top producers. These are American allies and trading partners. If they join the bloc, which Secretary Burgum says 30 countries are already interested in, it means the majority of the world's mined silver supply would be inside a system with a guaranteed minimum price. And everyone outside the bloc, primarily China, would face tariffs. So China restricts refined silver exports to the world. America responds by building a trading bloc that locks up the raw mining supply and puts tariffs on anything China tries to sell. That's not a trade war, that's a siege. Both sides are trying to control the silver supply chain, and neither side is backing down. Project Vault, the $12 billion stockpile. On February 2nd, 2 days before Vance's announcement, the White House launched Project Vault. This deserves your full attention because the implications are staggering. Project Vault is a $12 billion critical mineral stockpile, $10 billion from the Export-Import Bank, the largest single loan in the bank's history, 15-year term, plus $1.67 billion in private capital that was oversubscribed, meaning more companies wanted in than there was room for. The participants include General Motors, Boeing, Stellantis, Corning, GE Vernova, and Google. Now ask yourself a question. Why is Google in a critical mineral stockpile? Google doesn't build cars. Google doesn't build missiles. Google builds data centers. And every AI server in those data centers uses 3 times more silver than a traditional server. Google is not investing in Project Vault because it cares about mining. It's investing because it's terrified of not having enough silver to build the AI infrastructure it needs. When the biggest technology company on the planet starts stockpiling industrial metals alongside defense contractors, that tells you something the stock market hasn't priced in yet. The critical mineral designation. Let me add another layer to this analysis. On November 7, 2025, the United States Geological Survey did something it had never done before. It put silver on the official critical minerals list. Silver had never been on it, not during World War II when the Manhattan Project borrowed 430 million ounces from the national stockpile to build the atomic bomb. Not during the Cold War, not during any crisis in American history, but it's on the list now. Same legal category as uranium. That classification unlocks federal investment, fast-track mining permits, stockpiling authority, and yes, price floors, all in the name of national security. The United States government doesn't put metals on the critical minerals list because they're in surplus. They don't build $12 billion stockpiles for metals they think are going down. They don't assemble trading blocks for commodities they think are overpriced. They're telling you right now, on camera, in front of the world, what they think silver is worth. The question is whether you're listening. The hidden military demand. Now let me show you something that almost nobody is talking about. In 1996, 5 United States government agencies, including the Department of Defense, stopped reporting how much silver the military consumes. One year they reported the numbers. The next year, silence. That silence has lasted 30 years. The Silver Institute does not include military applications in its annual supply and demand reports. Not missiles, not satellites, not radar, not naval electronics, not guidance systems. The most detailed silver accounting on the planet has a hole in it, the size of the entire United States military, the 820 million ounce deficit. I showed you. That number does not include a single ounce consumed by the largest military on Earth. The United States has launched over 2,300 Tomahawk cruise missiles since 1991. Each one contains silver in its guidance systems, batteries, and electronics. Estimates range from 15 to 500 ounces per missile. Every single ounce was destroyed on impact, never recovered, never counted in the deficit, and Tomahawks are just one weapon system. Think about the entire US Navy. Every Aegis destroyer, every submarine, every F-35. Silver in the radar, silver in the electronics, silver in the communication systems. None of it is counted. The real deficit could be dramatically larger than 820 million ounces. And the government that classified the data is the same government that just told you silver is critical to national security. They know the real number. They're not sharing it. And they just announced price floors. Draw your own conclusions. The price target question. So let's address the number everyone wants to talk about, $1,000 silver. I owe you honesty, not hype. Silver is currently around $90. $1,000 would be 11 times higher. The gold to silver ratio at that price would be around 5-to-1. That has never existed in modern history. So I'm not going to sit here and tell you $1,000 silver is coming next month. That would be irresponsible. But let me reframe the question. 12 months ago, silver was at $31. If I had told you then that it would hit $120, you would have closed this video. You would have said that's insane. If someone had told you the government would put silver on the critical minerals list, create a $12 billion stockpile, announce tariff-enforced price floors, you would have said that person was delusional. It happened, all of it, in 12 months. So I don't ask if $1,000 silver is crazy. I ask, what would it take? Gold at $10,000, which Yardeni Research is already projecting with the gold to silver ratio compressing to 10-to-1, which is still wider than the historical average. A currency debasement event, which is exactly what central bank gold buying at this pace is pricing in. The 1980 silver peak of $50, adjusted for real inflation, is somewhere between $150 and $1,400 today, depending on whose numbers you use. At $90, silver is still historically cheap relative to how much money has been printed. $1,000 is not a 2026 event, but this decade. If gold hits $10,000, if the deficit deepens, if the ratio compresses $300 to $500 becomes a very real conversation. And from there, the gap to $1,000 shrinks fast. What a price floor actually means, but here's what matters more than any price target. A price floor changes the fundamental nature of an investment. Think about what silver was before February 4, 2026. Unlimited downside. China could flood the market. Speculators could short it into the ground. A hawkish Fed appointment could crash it 30% in an afternoon. You felt it. Silver crashed 27% in a single day last week, the worst session since the Hunt brothers in 1980. Now think about what silver became on February 4th. The government intends to put a floor under this metal. Price drops too low. Tariffs kick in. China dumps supply. The bloc absorbs the shock. A mine can't turn a profit. The government guarantees a minimum. This doesn't eliminate volatility. It doesn't prevent crashes like January 31st, but it creates a structural backstop that has never existed for silver. Never, not once in the entire history of this metal. Your downside is being limited by the most powerful government on Earth. Your upside is being driven by physics, by the fact that solar panels need silver, AI needs silver, electric vehicles need silver, missiles need silver, and nobody on this planet has figured out how to replace it. Your downside is policy. Your upside is physics. That is the most favorable setup silver has ever had. The investment framework. Now let me give you my framework for thinking about this. I'm not here to tell you to mortgage your house and buy silver. That would be irresponsible. But I will tell you how I think about hard assets in the current environment. In the Everything Code, I talk about how liquidity expansion drives asset prices. We're entering a period of massive global liquidity expansion, $10 trillion. Of debt needs to be refinanced in 2026 alone. When central banks print, hard assets absorb that liquidity. Gold absorbs it, Bitcoin absorbs it, and now, with government price floors, silver absorbs it with a structural backstop. The policy environment has never been more favorable. The supply-demand fundamentals have never been tighter. The geopolitical alignment us versus China for control of critical minerals has never been clearer. If you're going to have exposure to hard assets, silver now has a risk-reward profile that didn't exist a week ago. Final thoughts. Let me summarize what we're looking at. Fact: 5 consecutive years of supply deficit, 820 million ounces short on paper, and that's only what they're willing to show us. Fact: China controls 60-70 of refined supply and locked the door 5 weeks ago. Fact: Silver was designated a critical mineral for the first time in American history. Fact: Section 232 National Security Threat Declaration. Fact: Project Vault $12 billion stockpile with Google, Boeing, and GM participating. Fact: 3 days ago, Vance announced tariff-enforced price floors to 55 nations. Fact: The short sellers on COMEX are now fighting the United States government. Fact, nobody knows how much silver the military has actually consumed because they stopped reporting it 30 years ago. These are not opinions. These are documented events. Every single one points in the same direction is $1,000 silver. Guaranteed. No, is it mathematically possible? Yes. Is the direction clear? In my opinion, it has never been clearer. If this analysis gave you a new perspective, hit that like button right now. Subscribe if you haven't, turn on notifications. This is the exponential age. And in the exponential age, the biggest opportunities come from policy shifts that most people don't see until it's too late. Don't be most people. I'll see you in the next one.